Hi there, traders. This is Brad Gilbert with today's trading action. All right, now still a little bit of repositioning after the US CPI numbers, right? The whole interest rate sort of cutting cycle from the Fed is fully factored in, so weaker numbers haven't really had an impact. And I think we've seen a little bit of a rejigging of positions as we go through the week. But what we'll find, right, and this happens quite frequently where the markets are sort of caught out. We get the weakened US CPI numbers, it rallies, weakness was all factored in. We're back to sort of square one. I think we'll start to see the dollar start to trade lower again, right? Sterling is doing a good job of holding itself up. Aussie, it's doing the same. And Euro, just a little pause after that little break above 110. The Kiwi, well, surprise rate cut, still has it on its knees, but it'll come back as well. Dollar CAD, well, caught between a rock and a hard place, really. Oil, US fundamentals, CAD fundamentals, it's all a bit of a lottery. But I think we've just seen a bit of a short squeeze here in dollar yen and a little one in dollar Swiss. Now, if you don't think technical analysis works, well, check out where these instruments have finished, right? Dollar yen is sort of in that barroom brawl area. And you've got the Swissy right back to those levels. I think we're coming back to good levels to get short dollars. But the thing is, we're coming into Friday, right? And you look at the upcoming numbers, right? And we don't have a huge amount on offer. Now, retail sales in the UK. Now, this is going to be, I'd say, a pretty lively event if we do get some variance in the numbers. And once again, it really comes down to looking at the interest rate probabilities here, right? So why is sterling a thing? Well, the Bank of England, no change, 61.9%. A cut, okay, 38%. Now, that is not quite a line ball decision, but weaker retail sales figures will lead to a jump in the potential probability of a cut. Now, if the numbers are stronger or as expected, then it's going to be no change. So the real surprise here, or the real trading opportunity, once again, comes down to the UK retail sales figures. The trade, right, sits with weaker numbers. So if you are looking at the numbers here, the month-on-month, year-on-year, the key to it, okay, the poll 1.4 and 0.5 month-on-month. Focus on those minimum numbers, right? If we get minimum numbers, we should see sterling come off. And you know what? It hasn't got a great technical setup for a sell. So it could be a short-term trading opportunity. And that would really kick in a change the potential for a cut. Now, in saying that, if we got like a surprising numbers, right, and it comes back down to the technical outlook of sterling, and as I said, it's had a pretty good week amongst everything else that's going on. It is still sliding topside. So an upward stronger numbers sort of fit into the picture quite nicely, right? And that would lead to a definite no change. So there's two ends of the spectrum here. So stronger numbers, 1 to 1.7%. You know what? Give sterling a boost. Short term, we're going into the Friday close. So there's not a lot of time in it, but just be aware that, if we got serious weakness, the market's got to unfactor in or factor in a cut, right? And that's where the bigger move comes from. Stronger numbers, yeah, no change, no big deal. It's going to go up a little bit, but you know what? The big surprise move will be the downside. And you come down through the rest of the numbers this week. Now, the new services, I meant to show you this at the start, right? Dollar firm after US data quells recession fears. Now, you look at the numbers here. If I just sort of scroll back up and we get into the itty gritty bits of the numbers, right? Okay, industrial production weak, capacity utilization really weak. Whereas the retail, there were some retail numbers here as well, which were already also pretty crap, right? So, or retail sales actually, sorry, slightly stronger at 1%, but out of everything else, it looks terrible. So, like the media, they'd have you believe just because retail sales ticked up that, everything was good. But you take out automobiles, right, and you're at 0.4. So there's no real strength here, right? People are buying some cars. So is the US dollar recession fears over? It's just the hype around what's going on. So, like, there's no change in the outlook here. for the Fed. If I just get up the interest rate probabilities again, but what has happened, a couple of numbers slightly stronger. It's taken down the probability of a 50 basis point cut, which is pretty dramatic, to 27.5%, right? So we like order, like 0.25 would be good. And then we just get consistent 0.25 cuts. Having a minus 0.5% cut, it's a shock to the overall system, and that can discombobulate things. You see issues with global growth and the dollar rallies instead of falls. So we are in a good path. The numbers have not changed for the dollar, and they will not change for the Fed, right? So I think this is what I was talking about before, the US dollar coming back to just being calm and starting to drift lower. So keep an eye on some of these housing numbers, University of Michigan sentiment, the prelim numbers here. That's a pretty good number to sort of see what's going on in the economy. And that's pretty much it, right? Once again, these US numbers will impact sterling. So if you are trading today, you're probably looking, if you're looking for direction on various instruments, I would be looking at sterling big time, and then having a bow peep at the US numbers, right? As I said, it's been one of those strange weeks where we had, weaker US CPI, and we saw the dollar rally a bit. Okay, sterling's come back. It wants to go up. Aussie's holding its ground, and we've seen a clean out of fresh short positions in dollar Swiss and dollar yen. I got caught up in dollar yen myself. So that's the flush out. Now, what I think we'll get as we come into the third week next week, all we need is the numbers to come out as expected or slightly weaker. And I'm talking second tier, third tier numbers, and we'll start to see the dollar roll over, right? And that's it. So today I'd be focusing on sterling. Have a look at the sterling crosses. It's been a bit of a mixed bag, but sterling is actually doing quite well overall. Okay, so once again, if the sterling numbers come out really strong, well, it fits in with a nice short-term trade on a lot of these instruments, right? Weaker numbers, you see a bigger move, it'll have to be factored out. So pick your side of the market. Ideally, you want to have a clear sort of idea of what you're doing. Make sure you take the time to analyze what's going through on the global markets. And this is the other thing, just before I finish, the global markets, it's not exactly lining up like a crystal clear day, right? US equity futures up and the US Treasury yields are up, right? So that's a bit of a mismatch. We are seeing a bit of a risk on profile as far as the currencies go. It's just a surprise with the US Treasury yields up slightly that the dollar is falling, right? It's like a bit of a discombobulation. Maybe it's finally hitting in that the US dollar, the fundamentals are weak. So the dollar is going down against most other things. See how that plays out and double check that when you come in to the UK European session, because that's where the answers are going to be, trying to line up with what's going on with the market sentiment. Check the risk on, risk off sentiment, and that's where the answers will be, right? At the moment, US futures up, the yields, well, they're up. As I said, that's a mismatch. And it's going to discombobulate the action here on the major currencies, right? Bit of a question mark over what's actually going on. Is the dollar going up or is it going down? And it's a bit mixed across the bag. Sterling is your go-to. All right, guys, have a good one. All the best. Cheerio.